morning, everybody. It's Christian from Serene Education with the 4 Majors Notes update for the 20th of June 2013. Morning, guys. Okay, so who traded FOMC yesterday? Who traded FOMC yesterday and got stung? Very important. When huge news announcements like this are made, it's far better to stand aside. Huge announcement. Well, the FOMC in itself, Bernanke, everybody was more aware of this one, or more or want to know what the outcome was on this particular one, because Bernanke was going to confirm if tapering of their purchasing plan for QE3 that he mentioned a couple of weeks ago was genuine, and it seems as though they're going to continue with it. However, they're going to be well aware, they're going to be looking at the inflation to see that, and the next employment figures, etc. So what did we see on the markets yesterday? We saw a lot of backwards and forwards, that's for sure. However, the overall sentiment was negative for the euro, and we saw the US dollar climbing on that news. Where it's taken us now, we had a bearish engulfing candle. Price fell to find support above 61.8 fib on the weekly. A lot of indecision here, but you can see the candles maintaining above that level. You saw a nice bullish candle, however, not moving higher with that FOMC statement result yesterday. And the outcome was a bearish engulfing candle on euro, pushing price lower. And in doing so, huge fall yesterday. And doing so, heading towards a 50% retracement from our weekly high and low. And that is roughly just short of the 21.90 mark, which is above the prior consolidation highs here. The overall sentiment looked towards a 38.2 monthly fib, which is here at 13.1490. Indicator box, long-term positive, intraday negativity, and the R-squared is complementing that negativity. So we are seeing shorts intraday, and that's pretty much what the indicator box is telling us. The long-term sentiment looking positive, up. However, intraday looking negative and with strength. So be aware of that. RMO is still above the zero line on our daily. MACD is just going below, but the daily candle has still yet to close. So got to wait for that. We've got to be very aware of this consolidation range over here, for example. Look to the news to see if there's anything out today that's going to really reflect on euro, and we have a lot of news out today, guys. A hell of a lot of news out today. Loads of data after yesterday's FOMC statement results. We could see consolidation after that big move yesterday, and look and see where price is trading in relative to price support resistance levels. Here, quite clearly, you can see one of my weekly fib retracements. We're coming up to that level here at that 13.2-100. If I go to my 4-hour time frame, you'll see that after the big move, still moving slightly lower, but with hesitation on board. One thing to notice, we had higher highs leading up into this announcement. Higher, swing high, swing high, swing high, swing high, break. It was imperative that price maintained above 61.8, and that clearly wasn't the case, and now we're seeing price moving back to the downside. RMO is still above the zero line on our 4-hour, and the MACD extends to the downside. That's primarily because we've seen sell-off. So as it stands at the moment now, intraday support is going to be the 50% fib retracement area for this particular pair, which is at 13.2253. You have to be aware of that. If you're going to see any further selling to the downside, we would need to see this area. There's my hourly chart. Breakouts, got a massive move, consolidation, and then the continuation. This consolidation wasn't even 23 fib retracement. Yep. So very strong negativity coming into that, and sure that prices now move to the downside over the Asian session. So as it stands now, heading towards that 13.220 mark, which is our 50% fib retracement area. MACD is making its way back towards the zero line as we're heading lower. So just be aware of that. The consolidation RMO is below the zero, but we have to be well aware. Got to get below the 50% fib retracement in order to see any further selling to the downside of this particular pair. Sterling, here again, up until yesterday, we were trading above the institution, above a major support and resistance level. We wanted to see price yesterday consolidating above the 50% fib retracement, above the institution, above the price support and resistance. With yesterday's news, what happened? We saw sterling drop. And now where price is trading to is to the price support and resistance level here in the shape of the weekly fib retracement in the shape of the 38.2 fib mark, which is just below us. So as it stands now, if we're going to see further continuation down towards that 23.6 on our monthly, which is the most important one, we need to see this area here at the 38.2 being breached, and we've got our 90 odd pips to that level. So as it stands at the moment now, notice a lot of negativity out here, and the R-squared on our bigger time frames, our 30 hourly, 4-hour and daily, very much true sentiment in the direction. So if you look at it over here, negativity, and we're seeing that negativity. So as it stands at the moment now, we're looking for shorting opportunities for sterling But be aware of the first port of call here, which is 38.2. It's quite close. If I move into my hourly chart, getting a sell signal, everything on my hourly is in favor. But just be aware, we are moving into a price support and resistance consolidation in the shape of the 38.2 February tracement from our weeklies. It's 26 odd pips away. A lot of news today, guys. Following the FOMC statement for Europe, got to be well aware of it. We could see consolidation. We could see news announcements today that could reflect on probably a pullback of some sort for the euro and sterling. So we've got to be well aware of that. You can see the last couple of hours in particular, price moving sideways instead of lower. We are seeing negativity. Candles are red. However, price is trading sideways. And I guarantee we'll probably see further more of that to follow today because of yesterday's big move, but also because of all the news that we have out today for Eurozone as well as sterling. So if you are trading today, be very, very tentative, because after a big move yesterday, we should likely see a bit of consolidation before we see a continuation in the overall direction. But we have to be well aware of that consolidation range. US dollar Swiss franc, what happened? It came out for the US dollar or FOMC. We saw 1, 2, 3, 4, 5, 6, 7 days, 6 days of support. And I mentioned as long as price continues to find support at specific points after breakout, we want to see a genuine confirmation signal. Yesterday, the confirmation signal needed to be bearish engulfing because we were trading below a major support and resistance level in shape of the 23.6. It didn't. It came out the opposite. And as long as price moves sideways without breaking that range, ultimately what's going to happen is more purchasing sentiment to come on board. And the news yesterday pretty much gave us that sentiment. Now you can see the US dollar is trading above the 23.6 on our weekly time frame. Look at the directional candles intraday, very much positive. It's still negative long term, but the intraday sentiment is very much to the upside. And you can see price, that bullish engulfing candle yesterday, taking price above the 23.6. So now as long as it maintains above that area, we should be looking for positive sentiment, and our likely target is going to be back towards this 50% retracement, our monthly retracement, which is a good 92 pips away. However, you can see before we get there's a lot of action here in terms of the institution moving average as well as our 20. Notice the MACD is back, and the daily candle is trading above the zero line, which is what we want to see more of that. We have to wait for today's candle close to see exactly where that falls. And the RMO is working back towards the zero line, still below the zero line, so still negative. You can see the candles are still negative. Still making lower swings, and we're still trading below the major institution moving average. We have to get above that in order to be positive long term. But we come and play with the 50% monthly February retracement area above us. So here again, a lot of news out today. We've got the Swiss LIBOR rate, and we also have the monetary policy assessment, and we have followed by the SMB, the press conference. So a lot of news out at 8:30 a.m. GMT for Swiss. Have a look at this chart. Be aware of it, because we could see something happening this morning out of that particular one. Interest rates announcement 0.25%. I don't think there'll be a change to that. They don't expect a change to that. So just have a look at it and be aware of that as we head into the Hopper State this morning GMT. So as it stands at the moment now, consolidative, upside intraday looking positive. And if that's the case, then we should be heading towards the institution, which is at 936.30. Now it's be back up towards a 50% February retracement from our monthly, which is up here just short of the 94.23 mark. Last pair of the day, the US dollar Japanese yen. Here again, breaking all these major support and resistance levels to the downside and heading into the 38.2 after breaking the 50. However, you can see quite clearly over the past couple of days, price unable to break below that, and showing up the buying sentiment coming through. Yesterday's candle moving into trading into the 23.6 after the news announcement, which happened to be price support and resistance. On the Asian session, you can see quite clearly price taking it higher. As long as it maintains this view and closes above the 23.6, this 23.6 area now on our daily should be our intraday support. Okay, very, very important. As long as price can maintain above that level, now you can see quite clearly on our 4-hour blue arrow, blue candle, and you can see the 4-hour candle that's in play right now is trading higher. So if that becomes our support candle, RMO has just jumped above the zero. MACD is quite clearly seeing a lot of buying sentiment because the lines, or the color of the lines, are nice and bright green. Look at the sentiment today, guys. Very much looking for upside. R squared is generally telling us we should be looking at buying opportunities. As it stands, if the 4-hour, etc., continues this way, we should be looking towards that institution, which is back towards our 50% retracement area, which is a good 220 odd pips away. So more than enough in the tank to the upside. You can see a lot of consolidation as we head into that area. So you might want to take profit around about this area over here. So if you look at it, you're still walking away with a good 150 pips of profit to the upside. Be aware, there's still a lot of news out today for the US dollar later this afternoon, and as it stands at the moment now, however, you should still looking for buying sentiment on here. If it's near term, head towards this area here, take your profit when they present themselves. There's still 140, 150 odd pips of profit to the upside to take from. Okay, so that's it. Lots of news out today, guys. If you aren't in any trades, rather stand aside. I know you'd like to trade, but when you start seeing a lot of news like this, it all ends up to give you a lot of speculation. And if it's not directional, then you end up trading in a very speculative range. It's range bound, and you get a lot of huge wicks, and all you end up doing is losing your shirt on your back and not really getting anything. So it's far better just to, if need be, walk away with your profit still in your bag and fight another day. So rather wait to see what price does over the next couple of days. If you like anything, to see what the outcome is, so trade that next week. Okay, other than that, keep it simple. What are the rules of the actual the template itself, and what we require in order to see genuine buying and selling opportunities? Back it up for some money management, and you're on a winner. Okay, have a fantastic trading day today, and I'll catch you guys first thing tomorrow morning. Until then, trade serenely.